on NYSE Floor Talk at Exchange in Miami Beach is Andy Hicks. Andy is the Director of ETF Portfolio Management, Trading, and Research at SS&C ALPS Advisors. Andy, always wonderful to see you. Thanks for joining me today.
Hey, Judy, thanks for having me.
My pleasure. So now, Andy, tell me, what investor outcome or problem are we talking about today?
We're talking about the concentration risk in the S&P 500. I think we've all seen the Magnificent Seven, which is Google, Apple, Netflix, all the big mega cap tech stocks are really getting a push from AI. Now, what we've seen now is that the S&P is about 30% concentrated in those names. So for passive investors, that's a big risk in terms of going forward in 2024 with those valuations so high. There's a lot of speculation potentially that there's double ordering within AI, processors and servers. And so as we see global central banks potentially easing this year, cutting interest rates, and a re-acceleration of the global economy through stronger PMIs, which are the Purchasing Managers Index, we're starting to tell clients, hey, it's time to start peeling away some of that US allocation and specifically going into international developed markets where you see very, very cheap valuations relative to US markets, especially when you strip out the Magnificent Seven stocks. These stocks over the international developed markets are really, really attractive, looking at valuations and coupling that with projected earnings growth for 2024.
All right, and Andy, tell me, what ETFs do you have for investors to consider?
Well, we have the ALPS International Dividend Dogs ETF. The ticker is IDOG, IDOG. We've got a whole suite of dogs. And so what you have here, from a methodology standpoint, we select the 5 highest yielding large cap stocks overseas, international developed markets, and equally weight those within 10 GICS sectors. We exclude real estate because we don't want to double dip. We feel like advisors have that as a separate allocation in their portfolio. And by equally weighting those 5 highest yielding names, 50 names across 10 sectors, you get a very deep value portfolio, very cyclically oriented in terms of energy, materials, and also a little bit of tech in terms of that overweight. Now, importantly, when you look at IDOG relative to a market cap weighted index, an MSCI EFA, for example, which is usually 25% in financials, that's not a sector you really want to be in. So again, it's really important to look under the hood and understand your sector positioning. So we're telling clients, peel off some of that US allocation to IDOG, use it as a core allocation because you're not getting as much financials exposure, which you don't want to be in, but you're getting this cyclical exposure, which is very, very beneficial if we do get interest rate cuts and an accelerating global economy in 2024.
All right, and finally, Andy, tell me, where should investors go to learn more about your ETFs and also your market views for 2024?
Sure, you want to go to alpsfunds.com. As I mentioned, we've got 4 different dogs playing on the US, and as I mentioned, the international, emerging markets, and real estate. Really, really successful funds. I think from our standpoint, the proof is in the pudding, and we're starting to see a lot of flows coming into IDOG specifically away from broad-based international markets or funds because of that strong sector positioning and because they're so cheap within a valuation standpoint.
All right, well, Andy, always wonderful to talk with you. Thanks for joining me on Floor Talk today.
All right, thanks, Judy.